Brian, the issue of payment problems isn't new. It's something that's affected your earnings last year, and it related to a few payments in South Africa and also in Dubai. Is it escalating at this stage? Why did you have to put out this warning today?
Well, the situation hasn't improved in the last 6 months, and we went through a very thorough process, as we always do, for our audit at year end, and the uncertified revenues we've taken were a consequence of that audit. The power station program has advanced now further, and we're starting to pick up challenges in that problem. So in reality, we haven't yet resolved our past problems, and we've got these new issues developing around the power program where the delays on the program, we're being asked to look at acceleration, changing issues, the scope is increased, and having difficulty getting certainty that the payment is there for us. So our view has been that we need to just revisit the total package and recalibrate this whole question of recognition of revenues. It's a global issue, this whole question on major projects of recognition of revenues. And for us, so this is a calibration for us that enables us to go forward now from a new base.
Some of the previous projects, the Gaan Train, that program, of course, expected to wind up by June this year. Have the issues of payment been sorted out for the Gaan Train yet?
No, the principal issue in dispute there is this whole question of land procurement and delivery. That one is not yet resolved. I mean, there have been certain processes. We're in discussion with our clients on a regular basis. I mean, we are hoping that we can get at least some agreement on the way forward before we conclude the project and put it into full operation. And I'm confident that these are possible, but it's the time factor associated with the resolution process that's our primary concern.
How about the Dubai Airport Terminal?
Well, Dubai Airport Terminal, we completed the job on schedule. It's a great project. It's been working. Along came the global financial crisis, and essentially the process stopped. We've got a final account that we need resolution there, and we've now moved into formal arbitration on that contract.
Wayne, 13% fall in the share price today. Now, we knew about some of the problems at Murray & Roberts. As Brian says, it's a global problem, so it's not limited just to companies like Murray & Roberts. Why the sharp reaction from the market?
I must say, I was surprised about the sharp negative reaction. Maybe it was the extent, but the problems are well known in the market. I mean, the payment issues, the pre-recognition of uncertified profits in prior years. So it was certainly, in my view, well known that there could be some right back of it. As I said, maybe it's the quantum that surprised the market. But these issues and challenges that Murray's has was well known in the market. So I was surprised the share fell by so much just on the release of the news.
Brian, when you explain practically how it works, you can't carry these charges on the balance sheet. They have to be impaired to the income statement. Is that right?
Well, what happens is that you know, we do a contract, and the fundamental background to the issue is that we get awarded a contract, and on these contracts we experience significant scope change. So we're getting paid our original bid quantities and quantums, etc. But the difficulty arises in the mechanisms to authorize payment for variations of scope of work. When you get significant levels of scope change and variation, this is where particularly public sector clients start to have difficulty with their procedures. We've got to do the work, we incur the costs, but now we've got this issue about the payment. We take it through as an asset on our balance sheet, and it comes through the income statement as revenue. It's classified as uncertified revenue. It's an asset which is not backed by cash. As a consequence of doing this, we have to revisit this assessment we've made on a regular basis, and we do so constantly but formally every 6 months. And ultimately that asset gets backed by cash once we get these outstanding payments resolved. Now we're just taking perhaps a more conservative view, looking at the net present value of these uncertified revenues and taking into account the scope of our balance sheet, and now looking at what the potential might be of similar occurrences on the Eskom program.
At what point do you actually see everything balancing out? You see those payments coming in that you can write back those profits?
It's when we start to get resolution of these claims. I mean, we're not in any way unconfident or non-confident about our ability to go and procure our rights. So it is the time and the ardor of the process that in fact we have to think about and say, on a probability basis, how would we reassess the situation? And that's the number that we can take. There is a view that we should not recognize revenues that are uncertified at all, but this is a little impractical in the contracting game.
And stripping out the impairments for the period, you've also said that you expect a 30 to 40% decline in earnings per share. Yeah. So it indicates
for continuing operations.
Things are very tough still in the construction sector.
Yes, I think what's happened is that as in the contracting industry, what we do is as we start to pick up downturns, what we tend to do is we tend to pull into the present some of the things that we might see into the future. So if we've got a contract or an ongoing business like our materials businesses, where the indications for the full year are looking a bit tight, then we tend to pull as much of that into the present so that we can go through normalized into the future. So there's almost a multiplying factor as a consequence of a market going into a bit of decline. And it is tough in South Africa at the moment.
Any indication, can you give us an indication, I know you're probably in a closed period at the moment, of what your order book's looking like? I think it was 42 billion rand at the previous year end, and your opportunity pipeline at this stage.
Yes, well look, the order book went up to 49 billion at the end of the first quarter, and that was because we got picked up some work in the cementation group. Now the international and global mining sector is quite buoyant at the moment, so our cementation group is very active and we got no challenges there. Clough has got a short-term issue around marine construction, but it's very busy in its order book. So most of our problem is in South Africa. Our order book is still north of 40 billion and quite robust. I guess part of the concern in the market would be a lot of that is in the power program. And therefore, does this mean that there's no profitability in the power program? Which is not true. There may just not be short-term cash.